Thanks, Kevin. Earnings seasons refers to the months of the year during which publicly traded companies release their quarterly earnings to the public. And this morning, we're learning about what this means for you at home. Our next guest is Alan Boomer. He is a managing partner and chief investment officer at Momentum Advisors. Good morning. Thank you for joining us, Alan.
Good morning. Thanks for having me. It's always a pleasure.
And so, of course, we have a lot to talk about. Let's talk about why should the public be concerned about how much corporate companies are earning?
So, great question. So, earnings season happens about 4 times a year. This is the time of year, and we're currently in the midst of an earnings season right now. This is the time of year when public companies have to give numbers on how well they're doing. They have to tell you how much they've earned in sales, how much they've earned in profits, and often they give what's called guidance or expectations on what they expect to happen in the coming quarters. And so the reason why this is important is that it's always important because for people who are investors, you want to know the direction of the companies in which you're invested. You want to know at a high level what's the direction of the economy, what's the direction of certain industries. And so this is a really important time of year for those investors who are concerned about their money.
And of course, why is it important for these companies to be transparent during earnings seasons? As you mentioned, there's about four of them.
Yeah, 4 times a year. And the reason why it's important again is that, if you're a private company, you don't have to tell you don't have to tell the public anything. But if you're a public company, you have a duty to the marketplace to be transparent with your numbers. It's one of the things that really makes our financial system great. It's the idea that, investors, almost anyone can invest in stocks, and the companies have to tell you how well they're doing. When a company is private, they don't have to give you those sorts of disclosures. But once they go public, there's a requirement. They have to be audited and they have to give numbers that describe how well they're doing so that if you're an investor in that company, you're an owner in that company. You have a right to know how well your investment's doing, not just in the stock market, but the actual underlying profits and revenue of that company. And so what's interesting this year is that, we're clearly at the end of a recession that was brought on by the pandemic. And there were real, negative expectations on how poorly companies would be doing this year. And this earnings season has been really, really strong. So far, over 80% of the companies that have reported, positive results in terms of their earnings that are better than what was expected. 60% of these companies have reported stronger sales than what's been expected. And so when you think about the direction of the economy based on earnings, it looks as though the recession that we experienced because of the pandemic is pretty much over and corporate America is starting to do well again.
Mm. And what tricks can companies use to deceive the investment community?
Well, you hope they're not pulling tricks, but the things that happen during earnings season would be, you know, not giving guidance. Like you could consider that to be a trick. Guidance is when you say, "Here's what I expect to happen in the future." Often, when companies have sort of a murky view on what's going to happen in the future, they're uncertain. They might decide not to give any guidance at all, right? And that creates a situation where people don't know what to expect, and that I guess you consider to be a trick. But in reality, the rules are pretty black and white. You're supposed to be honest and transparent with regards to your sales and your profits, and you're not required to give guidance, but the market has come to expect it.
And of course, what's the best way to access a company's earning reports? I mean, what do we do if we want to see those numbers?
Great question. Well, it's all public. So, you can literally just Google, the company's name and the word earnings, and you'll find a million different places where information will come up. Like, for example, this week, Walmart is announcing its earnings. And if you just Google Walmart earnings, you'll find a plethora of information. But the things that you'll be hearing from Walmart will be, again, what was our sales growth for the quarter? How much profit did we make? And what do we expect to happen, in the next quarter?
And in addition to earnings report, what other important information should investors be on the lookout for throughout this year?
So I think it's really important to just think about industries, think about how they're doing generally. Last year was a year where the only stocks that did well were really concentrated within a handful of industries, namely IT, technology, companies like Zoom and social media companies and streaming companies did really well last year. Amazon did well. I think this year the thing to look for is which other industries are doing well. Like you're starting to see the financials, the banks do better. Well, ultimately, if this economy is going to turn around for everyone, we need to see broad recovery. We need to see a recovery in some of the hardest hit areas, industries like the restaurant industry, the hospitality industry, the hotel industry, airlines. So, again, I think the thing to look for is the breadth of the recovery, not just the concentrated growth that we saw last year in a handful of sectors.
Well, thank you so much for joining us today, Alan Boomer. We appreciate your expertise.
Thanks for having me. Anytime.
Have a good one. We'll have more news right here on BNC Morning after this break.